Hello, everyone. A huge welcome to you all. And I want to start off by saying a massive thank you for coming to watch the video today.
Absolutely. It is great to have you all here.
We know you have a lot of choices out there, so we really appreciate you spending this time with us to, get into the weeds a bit.
And today it's not just market noise. We are looking at a very specific and a very loud signal coming from the precious metals sector.
That is right. Today we are setting the stage for something pretty major. We're breaking down the fiscal Q2 2026 earnings call for a company you definitely know. They used to trade under a different name, a legacy name, but they've officially rebranded and are now operating simply as Gold.com.
And honestly, the name change is like the least interesting part of this. This was a historic quarter for the company.
Right.
We are not just looking at standard earnings numbers here. We are talking about a massive strategic investment from Tether, a relisting on the New York Stock Exchange, and a complete corporate rebrand.
It's a total transformation.
It is. This is a company that is fundamentally restructuring its DNA.
It really feels like they are trying to graduate from being, a niche player to a global heavyweight. So let's kick things off with a summary of the company's prepared remarks, starting with the headline news from CEO Greg Roberts.
Which has to be the Tether deal.
The biggest story, it has to be the Tether deal.
Without a doubt, that is the fulcrum the whole quarter swings on.
So let's unpack the specifics. Gold.com has entered into this huge agreement with Tether Investments. Tether is buying approximately 125 million shares of Gold.com at $44.50 a share.
And that's not even all of it.
No, and that's not all. There's another 25 million shares to follow, pending regulatory clearance. That is a serious injection of cash.
It is, but if you just look at the cash, you're kind of missing the point. This validates the business model in a huge way.
Awesome.
Well, think about it. Tether is likely the largest holder of gold globally outside of central banks. By taking a stake and getting a board seat, they're essentially saying, okay, Gold.com, you are our guys for the physical world. It's a massive seal of approval.
And that approval comes with some serious perks. Tether is providing a gold leasing facility of at least $100 million.
Which we have to talk about.
We will, but operationally, this seems huge too. Gold.com is going to provide storage for Tether's gold. Plus, they're going to offer Tether's stablecoins USDT and the gold-backed XAUT directly through their consumer channels.
Right. And it's a two-way street. Gold.com is investing $20 million right back into Tether's gold-backed stablecoin. It's a very reciprocal relationship. It bridges that gap between physical bullion and the crypto world.
Okay, now, before we get too lost in the strategy, we have to look at the financials from the CFO, Carrie Dixon. The numbers this quarter were, frankly, violent.
Violent is a good word for it. Revenue was up 136% to $6.5 billion. $6.5 billion. That is a massive jump.
It is huge. Now, to be fair, even if you exclude the forward sales, which can, skew things a bit, revenue was still up 69%.
Okay.
This was driven by higher selling prices for gold and silver and just the sheer amount of metal they're moving.
But here's where I want to push back a little. Gross profit was up 109% to $93 million, which is fantastic. But their SG&A expenses, the administrative costs, they increased significantly, up about 132%.
Right.
That's outpacing profit growth. Is that a red flag?
It's more of a yellow flag, or maybe even just an expected growing pain.
Okay.
You have to remember, they have been on a buying spree. They recently acquired SGI, Pinehurst, and AMS. Integrating 3 different companies is expensive and messy.
True.
So despite those high costs, they still landed with a net income of $11.6 million, or 46 cents per share. A lot of profit was eaten up by the cost of just getting bigger.
And the balance sheet? Can they handle that? Oh, easily. They have a cash position of $152 million, and their inventory sits at over $1.3 billion.
Wow.
And in a shortage, he who has the metal wins.
Speaking of metal, let's look at the operational metrics from President Thor Gjerdrum. This part was interesting because, we saw a bit of a divergence between gold and silver.
Right. Gold ounces sold were up 17%, but silver ounces sold were actually down 15% year over year during Q2.
That is surprising. I mean, given how popular silver usually is with retail buyers.
It is, but remember, Q2 ended in December. The market dynamics were incredibly tricky then. But look at customer growth. Despite the silver dip, their direct-to-consumer segment added 96,000 new customers.
Almost 100,000.
Yeah. Their total DTC customer base is now 4.2 1.4 million, up 37%.
So the user base is growing even if silver volume took a breather. I also noticed their lending business saw fewer loans, down 31%, but the total value of the portfolio went up 22%.
Yes, exactly, to over 120 million. Fewer borrowers, but bigger tickets.
So to wrap up the presentation summary, what was the CEO's take on the market outlook? This helps explain that silver drop, right?
It does. Greg Roberts was very transparent about the challenges in Q2. He mentioned a significant headwind caused by backwardation in the silver market.
Okay, we need to pause here. Backwardation. Can you just translate that for us? Because he blamed this for their trading losses and higher interest expenses.
Sure, this is critical. Normally, future prices for gold or silver are higher than today's cash price. That's called contango.
Right, contango.
It makes sense. You pay for storage over time. Companies like Gold.com love this because they can buy metal today, sell a futures contract, and lock in a risk-free profit on that spread.
Okay, so that's the normal state of affairs.
Backwardation is when the market flips upside down. Demand for physical metal is so high right now that the spot price jumps above the future price.
No.
Yeah, so if you're holding a hedge, a short position in the futures market, you are suddenly losing money on that paper contract every single day. It makes hedging incredibly expensive.
So Q2 was tough because the very tool they used to protect themselves actually worked against them.
Precisely. But the good news, according to Roberts, is that markets are moving back toward contango now. The anomaly is ending. Plus, consumer demand is elevated, and premium spreads are expanding. He sounded very optimistic.
That is a perfect segue.
Oh.
Let's move into the Q&A session. This is where we really get to see how management handles the pressure. We're going to go through the analyst questions one by one.
Let's do it. The Q&A was very revealing.
First up, we had Thomas Forte from Maxim Group. He had two main questions. First, he noted that silver is starting to run and asked about gold versus silver performance. And second, he asked about the Las Vegas facility capacity. Basically, does this huge tether deal mean they need to expand even further?
This was a great opening question. It hits on market trends and operational limits, and the CEO's response on Vegas was pretty impressive. He said they tested the ceiling in January, shipping over 120,000 packages.
120,000 packages in 1 month. That is a massive operational load. Did they break?
They bent, but didn't break. Roberts admitted they had to hire more humans to work alongside their automation. As for Tether, he made a key point. Tether is probably the biggest gold holder outside of central banks. They need a lot of storage.
Right.
Gold.com hopes to provide that, but he was on his time. We'll tell if they need to build entirely new facilities just for that volume.
And on the gold versus silver split?
Roberts confirmed the suspicion. In the last 8 weeks, demand has flipped back to silver. It's making up about 50% of their volume again. And importantly, premiums on silver are significantly higher now than they were 3 months ago.
Okay. Next up was Mike Baker from D.A. Davidson. He asked about the impact of those widening spreads on profitability in the current quarter, the March quarter.
Yeah.
He also asked if the trading losses in Q2 were due to customer buybacks. And finally, how the Tether deal impacts the P&L.
Roberts was incredibly direct here. On the current outlook, he said, and this is almost a direct quote, "You should probably think that we're going to have a really good quarter this quarter."
Whoa. CEOs rarely say that so plainly.
They don't, not unless they're already looking at the numbers.
So what about the buyback confusion?
He shut that down immediately. He said buybacks are actually great right now. When inventory is tight, if a customer sells you a gold bar, you can turn around and sell it 5 minutes later at a high premium. It feeds the machine.
So the losses were 100% from backwardation.
Exactly. And on the Tether P&L impact, this is where the finance gets clever. Roberts explained the $150 million investment and the gold lease will significantly lower their interest expenses. Right now, they pay 6 to 7% on their dollar credit lines. Gold leases are much, much cheaper, so they swap expensive dollar debt for cheap gold leases, improve liquidity, and cut costs.
Smart. Okay, next we had Craig Ergen from Roth Capital. He pointed out that competitors are having trouble keeping stock. He asked about Gold.com's ability to keep their 12,000 SKUs in inventory and about their mint capacity.
Right, and he also spotted an anomaly in the non-controlling items on the financials.
So what was the answer there?
Robert's answer basically highlighted their competitive moat. He said, having a strong balance sheet and owning 2 mints, Sunshine and Silvertone, is their ace in the hole. He mentioned that silver eagles are on allocation, meaning they're scarce.
Which usually sends customers looking for alternatives, right?
Exactly. When people can't get eagles, they buy Gold.com's private mint products. So they capture the manufacturing margin and the retail margin. It's a huge advantage.
And Vegas capacity.
He said they are aiming for 150,000 packages per month soon. As for that financial anomaly, it was just a hiccup. Sunshine Mint shut down its Idaho facility to consolidate in Vegas, caused a temporary whipsaw in production, but they're recovering.
Okay, moving on to Cy Jacobs from Jacobs Asset Management. He wanted to put a dollar figure on the pain from that silver backwardation in Q2.
The good question.
Yeah, and he also asked about other commercial opportunities with Tether, like could Gold.com act as a broker for them?
And this was the first time we got a hard number on that backwardation cost. Roberts estimated it was a $10 to $12 million swing year over year. They went from a $6 million gain in 2024 to a $5 or $6 million loss in Q2 2025 on that one line item.
That is a huge swing just based on market structure.
It is. He also mentioned these black swan events in silver, with it swinging $20 down and 10 up really fast. Regarding Tether, he called it a two-way street. He hinted that there are likely unannounced opportunities coming down the line.
Interesting. Next, we had Greg Gibbs from Northern Securities. He followed up on the Tether relationship. Where does Robert see it going? And he wanted more detail on the mint production ramp-up.
On Tether, Robert started brainstorming out loud, talking about a Gold.com credit card, maybe using stablecoins as currency on their site. That would be a major crypto integration.
And the mint ramp-up.
He gave a bit of a reality check, called the minting business feast or famine. They had cut back to one shift when things were slow. Now they are scrambling to get back to 900,000 ounces a week.
That's a huge ramp.
It is, and he admitted it's hard to find labor that quickly. But he stressed they have enough silver feedstock. It's a logistical headache, but it's a good problem to have.
For sure. Finally, we had a follow-up from Thomas Forte from Maxim Group. He made a pretty bold statement saying he believes the Tether partnership is the most significant announcement in the history of the company.
Which is saying something.
It is. And he asked if this changes their M&A strategy.
Roberts agreed with the significance of the deal. And on M&A, he said the strategy hasn't changed. But, and this is key, it allows them to do bigger transactions. Having Tether as a backer basically supercharges their ability to acquire other companies. They have a war chest now.
So, bringing this all together, we've covered the presentation, the rapid-fire Q&A. If we step back, what are the main themes here? How should we summarize this?
I think it boils down to four main pillars. First and foremost, the Tether partnership.
It has to be number one.
It's the headline. It provides capital, it solves liquidity issues with that gold lease, and it validates their entire business model. It fundamentally changes their balance sheet strength.
It's a game changer. Okay, what's number two?
Market dynamics. We're seeing this huge shift from that painful silver backwardation back to a profitable contango. But more importantly, volatility is high, and as we always say, chaos is profitable. It drives spreads and volume.
Right. And number three?
Operational scale. This company is stress testing its infrastructure. 120,000 packages, ramping up the mints. They are testing their limits, and they are succeeding.
Right.
This positions them to just eat the lunch of smaller competitors who run out of stock when things get crazy.
And finally,
the outlook. Management is unusually bullish about the current quarter, Q3. They didn't hedge their language much. They are expecting a really good quarter, and they seem confident they have the metal to sell into that demand.
It sounds like Gold.com has spent years building a fortress and is finally seeing the siege it was built for. Well, that brings us to the end of today's discussion. We want to thank you again for watching the video.
Yes, thank you for your time.
If you enjoyed this update and you want to stay on top of these market moves, please click the like button, share the video with your network, and of course, subscribe to the channel to stay tuned for upcoming content. We will see you next time.